Whose fault is it that the world economy is in a mess right now? Is it China with its lockdown policies? Is it Putin with his war in Ukraine? Is it Biden? Is it Donald Trump? Is it Boris and Brexit? Okay, well, actually, there's a combination of factors which has caused the world economy to fall. Right now, we're seeing companies laying people off. Coinbase, 18% of staff laid off. Tesla says it's making layoffs. Intel, we're seeing a whole load of companies there trying to cut back on staff, trying to prune, if you like, trying to make sure they get to the core and they rebuild. Of course, we know if we look at history that companies do this every now and again, and we see this time and time again. But look at this. If you'd invested when there was a bear market is when the market is down by more than 20%. 12 occasions since the war that there's been a bear market in the S&P 500. If you'd invested, then 10 out of 12, pretty good odds, you'd have made very high returns in the next 12 months. And your average return would have been 22%. We look at the crypto market, we see again, confidence has gone. Well, some sectors, it's just simply and solely because people are worried about the world economy. They're worried about recessions, they're worried about inflation, costs of goods have gone up. Is that because too much money's been printed? Whatever the situation, and projects that perhaps were overhyped. We look at the dot-com bubble. What happened there were their overhyped projects, and those companies, their share prices were high. But don't forget, out of the dot-com bubble came Facebook, came Amazon, came some fantastic projects. Same thing's going to happen in the crypto market. So stay with core. If it sounds too core cryptocurrencies, and if it sounds too good to be true, it probably is. In other words, you shouldn't be shy about investing now. If you actually have spare cash, then it's a good time to be investing, diversified, making sure that you spread your investments. You say, I haven't got any money to invest. Then, of course, it is tough times for many, many different people. And we're seeing, of course, right this around the world. Only thing you can do is dig in, find extra work, find extra things that you can do to get through this particular period. Good news is when we get bear markets, when we get recessions, then they actually don't last too long. So remember, tough times never last, tough people do. It can be 9 months to 15 months that you see on average a bear market. Of course, it can go back very, very, very quickly. So don't think that these things last forever. Got to dig in, keep going, try and invest, try and diversify. And that's how you make sure that you invest through a hurricane. Whoever's fault it is, right now, it's a good time to be looking at some diversification, investing into the market and making sure you're taking advantage for yourself and indeed your financial future.